Friends, you may have surely come across a situation where there are various experts who tells you to buy this stock or that stock and so on. Subscribe to their channel. They will give you profit making tips and so on, right? But very few of them actually tells you what is the basic criteria that one should try and follow in order to invest their money into it, and why they should invest there. That's the most important thing. So let me quickly cover this piece for the benefit of all of you today. Now basically there are three main pieces here, three main pillars here of investing, right? The first one is the quality. Before you see the valuation and other things, first and foremost is the quality of the particular company and the stock that where you should be investing in. Then if the quality is good, then you should look at the other parameters, whether the company is growing, what is the value proposition here, and so on. So तीनों चीजें साथ में मिलके then you come across and come to a point where you are sure and confident that yes, if you put your money here and invest here, it will work well for you over a long period of time, right? So I have mentioned here some of the most important parameters which should be checked. However, these are not the only parameters. There are many more things, and the real situation is a little more complex. However, these are the main things which can be checked to understand about the company and the various aspects, right? The quality may we take a look at the promoter pledging, right? So if a promoter pledges is assets, then what happens is the bank or bankers can liquidate that in case the promoter doesn't pay the necessary interest to the banker on time, right? So this pledging, if it is very high, then that's again a risk if you invest there. And I think that maybe 20% is a reasonable maximum which we should think of. Beyond that it becomes too risky. However, you are free to choose your own percentage. In terms of promoter holding, I mean, the same way, if the holding goes below 20%, then the promoter is actually reducing his stake. So the promoter might be thinking about something else, right? So in that situation, would you really like your investments to continue or not, is a question to yourself. So similarly, debt to equity ratio, right? If your debt component is very high, then what happens is whatever profits you make, that goes in terms of paying the interest, right? So that's another very important thing. Now to top everything, before you consider investing, you should understand what is equity capital and what is the total capital, right? So any company, whatever is the total equity, that's the equity capital, and whatever is the borrowed capital, that is the borrowed capital. So together it makes it the total capital for that particular company. And return on capital employed is a very important parameter. That's basically the percentage of net profit in terms of the total capital. Now, if a company doesn't have any debt, then the ROE is equal to ROCE. And there's another important parameter to be checked is the PE divided by the growth of the company. This basically indicates the valuation or the value proposition. So that's why this is a very important parameter. Right now, we talked about the quality parameters, right? So these are some of the key aspects of that. Now, whether a company is growing or not can be found out from certain other things like ROCE. It should be greater than the previous year ROCE. Likewise, ROE should also be greater than the previous year ROE. And then the operating profit margin from the core business, right? It should not be like companies selling land and then making profit. So that's not a core business. Maybe if the company is not into real estate or other things, then that's definitely not the core business. So from the core business, the operating profit margin in over a 5-year period should have a decent 15% kind of a thing. And then the order book should be high. Only then you can expect a growth, right? So these are some of the key aspects of the growth part. And for valuation, like I mentioned before, PEG is a very important parameter, and PEG less than 1 definitely indicates that the company is undervalued. Equal to 1 is probably at par with the value it should have in terms of its growth. Now, when you are investing, you should also look at the industry PE of that company. If a company is into maybe certain FM sector like FMCG, then what is the industry PE of FMCG, right? And the company where you are investing in at least should be less than 80% of the industry PE. Otherwise, you don't expect a big jump there, right? So these are certain fundamental KPIs and parameters which any investor should look at before investing. If you do like my videos, please do subscribe to my channel, and I will keep coming back with a new topic on different aspects of finance and investing. Thank you so much.